Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart, and you can see they continue just to climb slowly. I mean, there's been a couple-day consolidation, but they continue to climb the upper Bollinger Band after we got the resolution last week. I just want to go straight to the hourly chart because it really illustrates what we've seen this week. So you've got consolidation, couple false starts, up, down, and then really considering how tight the bands were, we really hadn't seen bands this tight in a few months on the hourly chart. Considering how tight the bands were, you really had a slow motion type of a breakout up to 40.92.75. So yet another new all-time high, and we continue to knock on the door of 4,100. I meant what I said yesterday when I said the bears are noise. They are just noise nipping at your ankles anywhere above this 9-day. They're just dips to be bought. Now, for our part, the last couple days have really just been about finding the one or two decent moves. We were long yesterday into the close, and we were long into Globex, so that we ended up getting the benefit of the resolution. We're flat now, and what you're seeing is it's really flattened out the last 5 hours. It's coming back into the hourly mid-band, 79.80. So that this 80 area is going to be important off the open. You got volume weighted average price, 5-minute mid-band, and our proprietary moving average all hanging out between 82.5 and 83.5. So you take all that together, and 80 to 84 is going to be the key area off the open today. Win that area. If the Bulls win it, they have a chance to go back and retest that 92 area. If the Bears get it, they can try to challenge yesterday's Globex low down at 56.5. But that's really, for the Bears, it's only half the job. They've got to get back below something that matters. And I haven't echoed this rule in a while, but we're back in the type of situation where it applies. You're not going to get any kind of meaningful pullback in this tape until two things happen. You need to close below a level that matters. What's a level that matters? The 9-day weekly pivot, the 20-day something. Okay, and then that's part one. Part two is you have to stay below that level for an entire following Globex session. If the Bears can do those two things, then we can start to discuss whether or not they're relevant, because right now they're just a vehicle for dip buying. That's just reality. So sitting around fighting price, hoping upon hope that somehow it's going to pull back. We had this discussion in the room yesterday. If it was going to get faded, it would have got faded back here when it went up and grabbed the 73s. Instead, they brought it down a little bit, and then they worked off all that froth. So when everybody gets all jumping and hopping mad that we're due and it's overbought markets stay overbought. Oversold markets stay oversold. Because everybody wants in them or everybody wants out of them. So all this did here was work off any froth, and then they dragged them up another, 20 handles. So you have to fight that instinct to say, well, just because the market is going up, that it's going to immediately turn in my direction and come down. It's not the way it works. It's not the way it works. If you want to see the market come down in a meaningful way, then have the market do what I just explained. You do that, and you might actually get a pullback that lasts longer than 20 minutes. All right, so 80 to 84 is the key today. Keep an eye on it. Everybody have a fantastic day. Be safe, be healthy. Take care. Come check out the room. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.